So
show.
today was a nice trending day to the downside.
Yeah, there
Nice
was
motion
some.
point. Yeah.
Yeah, I was looking on 90 minute. Several good outliers just in the last couple of days to the downside. I bet the 15 today was all fired up. Three real nice ones. Had a little one to the upside. Downside, upside, nice big downside run. Earlier had a little downside run. Some of the safest trades you can ever get into, in my opinion. Watch that bear. Watch that
On the
variance.
15 minute. On the
Oh
15
yeah,
minute.
yeah,
Remarkable.
man.
This variance
So
on
remarkable.
yeah.
Very powerful. Very powerful indeed. They're worth. That thing flips to an outlier. If you just want to be super patient, get in. Get in there. Set a limit order close to where close to where the market price is at, so it gets triggered. If not, you might have to chase it down, but it's usually worth it. Usually worth it. You're gonna get a good trade. The old man left me a coonskin hat, real one. Should start wearing that, except it's 90 degrees in the cabin from this wood burner. Oh shit. Been an interesting few days, I have to say. Getting used to my new surroundings. I'm in the middle of freaking nowhere. Let's see here. Yeah, volatility's flat on the 15 minutes, so obviously, right? Probably going to get like a $500 move one way or the other. Where's the new levels today? Let's take a peek. Pretty big daily range. It looks like about, what is it? Dun, 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 dun. It's 42,519. All right, let me see. Yep, about $500. $500 daily range. Bottoms are right up here, about 42,525. Yeah, I can see definitely a 1SD move one way or the other, possibly. So that volatility on the 15-minute like that, probably good. I mean, that's $1,000 move in both directions. So the 1SD range on the daily right now is about 2K. Pretty big range to play in. Obviously, Laplace is a lot tighter.
Yep.
Probably about $1,000. Would imagine 42, $800. $800 68.3 Laplace and about $2,000 first standard deviation normal distribution. Let's see here. Let's take a little peeky poo. Here. Talking about this yesterday, right, on the daily. I mean, it's closing below the monthly range. Barely at the, what is it, end of the first week? Yeah. So we're through the first week of this month. BTC closed below the daily reverse wave trend and the 9 and 33 variance log moving averages. Reverse Fishers down around 41.5 area. 41.5. A little bit above the 1SD, about $150. Right in this range right here. It's actually probably, let's see, which 4 hour? 1, 2, yeah, about the second. Yep. Second standard deviation normal distribution on this 4 hour candle. What I'm seeing. Could be wrong. Another one stuck in there. Let's see, ladies and gents. 1, 2, 3, 4, 5. No, they're all there. Yep. Okay. Yep. Second 2SD move in this 4-hour candle. Pretty much go down and test that daily reverse Fisher. That would be interesting. Get everybody chirping. Oh, told you we're in a bear market. People are funny, aren't they? Some of the stuff I read, kind of chuckle. It's actually able to look online a little bit today. It's raining still. Not good. Dealing with a lot of mud. Let's see. Yeah, closing below the monthly range on the VRE, and this will be crucial. If it breaks that daily reverse Fisher, right? I think I talked about it yesterday. Right when you got the nice cross up, that'd be one hell of a fake out if this thing turns around. Closes back up above it by the end of the weekend. There's a little gappy poo on the knuckleheads that wear suits. Let's see here. Boom, 42.7. Yeah. Oh, really? Okay, so yeah, tell you what, institutional futures closed right up by it earlier. See something real quick. I bet that's right. Let's see. It's when they close, 5 p.m. You know what? Changes real quick. 15? Yep, there. I got to get on the right time zone. Let me see here. Yeah, boy, right when they closed, it dropped from, right there around 42.8. As soon as the CMEs closed, had a nice outlier on the 15-minute. There. Go to stream chat. Oh, yeah, the variance, Aaron. If you just want to be more on the safe side, that's why I use it all together, obviously. Say there's an outlier, start to get this outlier to downside, and MJ's already knows what I'm going to say, and there's divergence, right? Is there any divergence with that play? Let's see here real quick. Yeah, little bit, right? Little bit of hidden bear. Higher high, or yeah. Can I even count that? Hold on, guys. Interesting. Couple different these little pops down right here. Hidden bear, boom, boom. But on the bottom side was creating bull. The hidden bear and the bull just doing, 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 doing. Like the sound effects. Maybe I should get a soundboard. What do you guys think? So anyway, when you get variance outliers on these low time frames, it's worth getting in a trade. If you're not already stalking the trade because you see everything, right? You see volatility low, you're looking, right now. 15 minutes at a 3%. You're looking for a variance outlier right here. Let's see. So if you get a limit order filled because you're already been stalking that trade, you're already in, so it doesn't matter. But if you want to be real patient and be careful, wait until that outlier really starts moving, the volatility is expanding, and try to set a limit order close to where price action is, because usually it fluctuates enough where you get it close enough, your order will get filled without being the taker, which is what you want, right? You want to be the maker. And sometimes, if it's powerful, that is a situation where I would, if my limit order doesn't get filled, I've been there. I'm sure everybody has. You set it, and the fucking price just just slipping away from you. So you switch the limit order, you pull it up by price action again. It continues to move. At some point, you got to mark it in if you want in the position. I don't do that often, but usually before an outlier is even happening, I'm stalking it. I'm already stalking the trade. Something's going on. So yeah. Uh-oh.
Soundboard.
Nice. Nice. Yeah, but that's all I was talking about, Sarah. He said that is annoying. Yes, chasing the fat tail. That lizard. Oof. Ugly little bastard, isn't it? That's okay. Got any questions? Sarah? See you typing. Somebody spur me on. Yep, exactly. You know, sometimes, not often, because you never want to get used to being the taker. You always want to be the maker, right? But sometimes, got to bite the bullet. If you want in the trade, especially if you're just being, if there's divergence, right? If you got low volatility and there's divergence building, especially bull or bear, get ready, right? You're already stalking that trade because that's what volatility traders do. Volatility's low, your antenna are up. You're like, okay, here we go. Volatility's low. What does volatility do? Volatility expands. And when there's volatility expansion and you know how to correlate it, it's going to give you a direction. The variance is going to let you know when that data is saying bye-bye to the mean, zipping off into la-la land, and how it's correlated, and whether or not you're having a fat tail event. So this is the indicators. They're set up beautifully. I mean, we've got a bunch of indicators, and these are my go-to. These, it's not like I don't look at the other ones, right? You know, I've got my probability chart, projection bosses, and the current candle ranges, and then the ultimate power mean, which that beauty deserves its own chart, in my opinion, because there's a lot going on. Right? Got your power mean band if you have it set up that way. I'm sure you guys that have used this indicator are going, holy shit. It's a coding masterpiece is what it is, in my opinion. It's pretty incredible. Everything they packed in here. Lots of different plots to play with. Right? I like running 3 variance log moving averages, 933 and 99. Works out really well for me. Then reverse Fisher, reverse wave trend. It's a no-brainer. And this powerful little cross between Fisher and wave trend gonna get tested, right? The only crosses I give a shit about. The traditional TA people can talk all day about their crosses, death or golden or whatever. They got all kinds of names for stuff. What are they trading with moon cycles and all kinds of crap out there? We were talking about yesterday, Fibonacci. All the power to you, man. All the power to you. That's the way you want to trade. Yeah, it's okay. I'll take the volatility trading any day. Any freaking day. So let me see.
Absolutely.
So, yeah.
Happy to trade the maths.
Hey, man. 100%. That's the easiest thing to tell people if they ever ask, well, what is it? What are you guys doing? Like, it's all probabilities. Everything. All of this. It's nothing more than the probabilities. You've got some good indicators that don't lag. They're based on returns or the distribution. Learn how to use them. And ball's in your court. You can definitely be a market maker. No doubt about it. Powerful one, too, at some point. Powerful one at some point. You know, a lot of these guys out here, they just talk shit. They don't even trade. We know this. We know this. You know why you know it? Because they got too much time to talk. That's why. Trading just devours your time. Good traders. You're not out dicking around while you're in a trade. You're monitoring them. Your volatility trading low time frames. You have to be at your workstation. It's your job. It's everybody's dream. They want to get rid of their 9-to-5 job and be a trader. But you'll quickly find out that it's a it's a bittersweet thing, because the trading it'll wear you down. I don't care who you are. It's mentally exhausting.
Everyone needs to take breaks, man. Absolutely.
Yeah. I'm going on like 7 weeks, and I'm just now becoming normal.
What is normal?
Yeah.
Other than the distribution model.
Yeah. But I still look at the charts all the time. Today I was actually into the charts.
Yeah, but there's a difference between looking at the charts, reading the charts, and actively running your workflow on the trades, for sure. Huge difference. But yeah, man, everyone needs to take time off occasionally. It's critical. But yeah, generally speaking, active trader it's a grind, but it's a good one if you're good at it.
That's kind of a good question there, Saron. Yeah, I mean, and see, that's a good way. That's what I like to do. That's what people don't realize about correlation. You could take a long BTC scalp. There's something super highly correlated with BTC, Solana, right? Ethereum, ADA. One of the big alts are going to be, and I'm talking, you want something that's significantly positively correlated on, in my opinion, because it's gonna fluctuate between like daily, 4-hour, 15-minute. But I want I want it to be positively correlated on the 4-hour, and then I'm looking for significant positive correlation on the 15-minute. Like, you got to have multiple monitors, right? You have to have it all up. Couple trading screens. So I mean, need a little robot to do it for you, right? But that's the best way. Instead, what do people do? They'll take their account and they'll go 50x, right, on one trade and shit. End up getting freaking liquidated. Where, say you got 4 BTC in the account, you roll and you're going into a long BTC scalp, and say Solana's significantly positively correlated on the 15-minute, the 4-hour is positively correlated. You enter the positions, 3 BTC long, 1 BTC, or in one of the BTCs, you're long in Solana. Usually works out pretty good. Instead, people would rather use leverage. Oh, you don't have to do that. And we all know sometimes, that BTC has a nice, let's just say even 1% move. Say your trade's an hour on the 15-minute or something. Where Solana could move what? 3, 4, 5%. So it usually works out pretty well. I answered your question. I didn't even see you ask it. Good. Oh, it's much easier trading one asset. There's no doubt about it. Get good at one. Then you can start.
Yeah.
Then you can start dabbling and get more monitors. And I mean, trust me, there's people out there not using bots. They are a bot. They got tons of monitors. They're running a lot of trades at the same time. Scalping the low time frame volatility on all these markets. You don't see anybody talking about it. That's what's a riot. That's what's a riot. The only people you hear chirping on your YouTube are all the people they either don't even trade, right? Or they don't have a high P&L. They're trying to tell people how to trade, which that's not what we're doing. We're giving people the right tools to learn how to trade if they want to. If you master this system, it's just incredible. It's incredible, but people love to run with the herd.
Yeah, this is a complete trading system with actual proper math that gives you both sides of the equation and leaves you low uncertainty and high probability of success in your trades. So that is why the average retail trader will avoid it, because they want gimmicks. They don't want useful information that they can learn from.
Right.
They want signals.
And you learn how to read the VRE. And you're cruising along. We opened the day yesterday. Super tight daily range. I said, it's going to trend. Did it trend? Yeah, big time. Almost a couple K. All together, these 3 down moves, a couple up moves here. I mean, this thing probably moved 5K. Let's see here. But we're pretty much right, just squirting sideways. Not getting above the center of the monthly. Never closed a 15-minute candle above that yellow cross line. Finally do. Bounces pretty much off the top of the tight daily range. Shoots up, finds support on the top of the monthly, then gets rejected at the 68.3 Laplace distribution range to the top side. Rejects it pretty damn hard. Tries to find support on the daily range in the 68.3 to the downside. When you see this break, and here's my opinion, when you see that 68.3 break to the downside, but then you've got the bottom of the monthly right there, where there's going to be a lot of algo right there buying, which they did, and they sent it straight back up to the 68.3, the top side. But because this broke, especially that easy, went sideways for a few candles, but then just bye-bye, all the way to the bottom of the monthly. This was inevitable, in my opinion. Next move, whoop, right down, almost a 1 SD move, which we got right before the end of the day. And BTC right before the closed right. I mean, I'm talking probably $5 above the first standard deviation on the daily. So when you understand how these distribution levels and these price action volatility ranges interact, you can get pretty good at just it's good practice too. If you're not actively trading, you're just sitting around, have the chart up and be like, oh, I know exactly what's about to happen. It's telling you where all the volatility is, number one, of the price action, and where it is, where it's matching up with the distribution, because that's important, because we know that it's all probabilities. All right, it's all probabilities. That's why sometimes stuff lines up so perfectly, right? It's a no-brainer. People that have been using this for a while, you just look at it and you're just like, yeah, oh, this is getting ready to happen. Why people are out there struggling for no reason at all. Except they want to follow the herd. We like to ruffle the herd up, but hey, it's all good. If you do not want to come to Alpha Trading, that is quite fine. We will be here. After all your liquidations, we'll still be here for you, my friends. That's not humor. That's for real. We're not going anywhere. People learn their lesson at some point. Yeah, there's pretty much been all this in. Yeah, it's just distribution, man. I love saying that word, don't I? Since March 28th, we had the high. This baby is just distribution all day long. Good stuff. Using those retail traders, using the less sophisticated bots. That's happening all the time, guarantee it. You spend $500 on a bot and you think you're going to tangle with a bot that costs 20 grand, good luck. You're going to get tricked. Your bots are going to get tricked into bad positions. That's why I've never been big at pushing for a bot with our system. I think you're using this system. You need to be your own bot. It needs that human touch. You got to be at the workstation. You got to be working it. Yeah, it's the weekend in the market. Going to go painfully sideways. No doubt about it. Let's see here. Did we get a 2-day? Let's see. Yeah, today, right? Yep. Okay. Yes. So we got a new 2-day today. 3-day? No, 3-day closes today, though. So we got a new 2-day. What about the 7-day? Bilbo, you dumbass. Like, no, it's different. It's not a weekly. You put this on index. Thank God you guys are here. There's somebody listening. I'd be like, I'm having another episode just talking to myself. 9th. Oh, just got a 7-day candle. Is that what I'm hearing? Yes, literally. Okay, so we just got a new 7-day candle. So this is a good chart to look at, right? Reverse Fisher was supporting from the all-time high all the way to the local macro low on the 7-day, down there around 33.1. Reverse Fisher, shot price action back up. On the 7-day, look, so beautiful, but this is typical, all right? This is a battle, right? The war will never be over. There's just one battle after another. So this last 7-day candle, whoop, run it back down, closed it below the variance log moving averages, a 9 in the 33, and reverse wave trend. So, and just got a 7-day. Let's see something here real quick. Yeah, okay, that's what I wanted to see. There's some hidden bull setting up. Hidden bull setting up. The log return Z-score is coming off the 90% confidence interval. There was never an outlier, though. Usually when you get an outlier deep into the other side, we all know what happens, right? Get an outlier, boom. It usually, I mean, this is a little, if that would have went up to 95, it would have probably immediately came back down, but it messed around a little bit up here for a while. Then we got an outlier into the downside of the confidence intervals. Almost ran it to the top here. Yeah, this thing's a little shaky. There's actually, you know what? There's hidden bear. Or no, sorry. Bear divs setting up. Yep, bear divs setting up on the 7-day on the log return Z-score. But it's setting up hidden bull on the return oscillator. Especially if this were to go a little deeper, there'd be a couple stabs. So what divergence plays out? That's when you start dropping down through the time frames, right? kind of flat over here. See that entropy on the 7-day? I've talked about that too. Let's check and see if the weekly's any different. Actually, log return z-score is a little different. It definitely set up some hidden, or some hidden bull div that ran it up to power mean band. I mean, look, it rejected perfectly off that power mean band. Donk. The tight part. That's another thing. Learn how to read that power mean band. It's pretty powerful in itself. No pun intended. Or was there? Let's see. Yeah. 12-hour log return z-score is kind of bottomed out, man. That's good. Let's see. Yeah, so pretty much weekly has not been in trend since the run up to the first all-time high, like 65 or whatever, right? Had a little pullback, and then we ended up going up to 70K. Not any strong trend. I mean, right here at the end before the all-time high, started to drop. You want to see this baby nice and bright blue, right, for trend. And I'm still saying it now. I mean, look at how random entropy is, right? It's flashing white, very random. But that randomness definitely, it's correlated to the downside. So this thing's just floating down. If that was heading into randomness, losing its correlation to the downside, like a darker pink, that the price action would be walking up. Instead, it's been walking down on the weekly, especially this last week, right? After 42 or 48.2. Let's see. But the next trend on the weekly, I mean, we're talking about, I don't think the downside will be as extreme. And I think if it does start to trend to the downside, it's going to change up and flip and go back up to the top side anyway. But I'm saying Bitcoin's going to be at 100K or 20K. We get some strong trend on the weekly again. This thing's it's going to do something. All right. I love leaving everybody hanging. I can guarantee you one thing. It's going to go up a lot or down not so much. But we want signals. Yeah, I trade low time frame volatility. Not many can keep up. Let me see here. Yeah, especially, let's take a peek here. What's that top band? 70, 71? Yeah, bottom band's at probably 15. I could actually see like a 2 SD move to the downside, possibly even a 4 or 5 to the top side. Maybe 80 or 90 instead of 100. But right, it's all going to come down to over here. Same thing's happening right now. It's happened at the 41K low. Go up, you reject a couple weeks off of the 95.4 Laplace, and then you end up working your way down to test these lower levels. in the distribution. When we started this up move, I threw another projection on. Same thing. Boop, gets stifled by the 95.4 Laplace distribution range. Heading back down. Would be a bit surprised if the mean got retested. I mean, we're back down to 38. Top side of the 68.3, 40.5. Interesting. Because the one thing that is not good, Bitcoin closed below the monthly range. Here's the bottom side. Right before the close, the bears made sure, push it down. It was even in the charts. We talked about it earlier. That last move right there, very obvious. Very, very obvious. Couple that with the daily closing below the reverse wave trend. This will be settled after the weekend, in my opinion. What's the volatility look like? Yeah, 4 hours pretty expanded. Daily's at a 36. Yeah, everything was pretty low and it just started expanding. Okay. So 90 low. No, yeah, we're good. There's a high probability this thing just goes sideways all weekend. Just I'm looking at the volatility there.
I got a quick question. How'd you put up the cones so fast?
How did I what?
How'd you put up the cones so fast?
Put up the colon where? What are you talking about?
How did you put up the cones so fast?
Oh, how did I put up the cones? Here, let me show you. Well, I mean, you're talking about these cones, right?
Oh, so you had them on separate charts?
Oh yeah. This is I've got about 6 monitors, and when I'm actively trading, this chart's on one monitor, this is on one, that's on one, that's on one. I'll have all these charts up. This not so much. It's more for me, this is more on macro. I want to see what's going on. Are we near this wave trend or Fisher? But yeah, those other 3 charts, 100%. They're on 3 monitors, and I got my trading screen up, and I am working all 3 of them. This wouldn't even be on the weekly. This will either be on a 5 or a 15 minute. And once a move starts, right, I've got a projection. I want to know where that 95.4, especially if volatility was low and it's starting to expand, and we're having an outlier, right, on the variance. It's a no-brainer. This thing's probably going to go to the 95.4, take profit. Boom, right there. That's where you would take profit. I mean, I can pull it. Let me see here on this move we had earlier. Yeah, was it this dude going into the end of the day? It was. But if we take measurement here, let's go to, because the outlier was here, 34. Switch this up real quick. Baby almost ran into the 997. You can see, right? If you're in that trade on the 15 minute, I mean, you're out. You're out in probably 40 minutes, if that. You're taking profit right here at the 95.4. And that area, to be honest, was that 43,225? 43,225. This is how shit matches up. It's ridiculous. So where else? You know, you're getting the rejection from up here. And that's the top side of the 68.3. So you see, I'm looking at everything. I'm looking at the volatility. I'm looking at where price action is on this chart. And then on the move down, right where I would have taken profit on the probability chart where the 95.4 was, the daily bottom side of the 68.3, same area. So when I see that matching up, I'm like, perfect place. Did the move almost go twice? Did it? I mean, I got half the move, right? I don't care. Got a victory. Another win to put under the belt. That's where people, they think they need to use leverage. So no, you just need to trade low time frame volatility. You don't need to use leverage. Got to be persistent. Set out 4 to 8 hour block a day. Come in and trade to 5 and 15 minute. Once you learn how to use the indicators. And if you just limit your loss, I mean, like immediately, trade turns on you, bye-bye. Just market the hell right out of it. That's all a stop loss is anyway. It's a market sell or a market buy. Just market right out of it. Even if it's just a quick wick to go down and then it turns around and goes in your direction, you don't give a shit. You limited your loss. What if it kept going? We've seen it happen a million times. People are like, it's only going to go $100 below. Oh, it's at 500. Well, I can manage that loss. Well, now it's at 1,000. Oh, now I really need it to go back up. People just hang on the trades and hang on the trades and hang on the trades until they literally get liquidated or it hits their stop loss. They've got some astronomical space above or below. It's crazy how people trade. But
you start moving your Fibonacci levels.
Yeah, people start moving lines around and shit. Oh, here it fits better like this. It's like we don't do any of that. We're just using We're just using volatility indicators, statistic indicators, and then our distribution models. Normal distribution, Laplace distribution, price action volatility ranges. I mean, most people look at this chart. If I ever post this chart, people snicker and do shit, and I just laugh. I'm like, yeah, I bet you've been on the other side of my trade. Where do you trade at? You trade at FTX or Bybit? Where are you at, buddy? But yeah, people look at this and it just brain lock. That's not anything worthy. And it's like, well, really? Snapshot it and really look at the chart.
Someone called me out for literally having autism on my chart when they saw my chart, man.
Yeah, it's all good. It's all good. When you start building up your P&L, right? That's bottom line. People can say whatever they want. In the end, P&L is all that matters. And people will not even show you, won't tell you ever, because hardly anybody has a good P&L. These markets are fucking like trying to catch a greased pig. Especially if you're trying to swing trade it on a scalp low time frames using traditional PA, lagging indicators, silly methods, using moving averages that are lagging instead of using log return moving averages. And that's what we do.
But
I'm in disbelief. I got like 2 emails back to back. One email is from AARP. The other one's from our senior discounts.
whoa.
So what are they trying to say? I'm old? Come on,
What's
man.
discount rate, bro?
I'm getting old people fucking solicitations.
Offering diapers yet?
Not yet.
Not yet.
Never know though. Never know.
Is this stream being recorded?
Yeah, MJ's recording it. That'll definitely be in the mix.
Sorry, I would have thought by the hour stamp it would have ended. Sorry, man.
No, I think he's still recording for sure. But I got to get out of here.
Sorry for taking your time, sir.
No, I enjoyed listening to you. Takes a lot to shut me up. I just sat back. I was like, sweet, roll, dude.
Yo, man. You're teaching a kid how to use an AR-15 when he's only using it.
Right? There you go. For sure.
Cool.
Well, yeah, I'll be back 5 p.m. Eastern Standard Time on Monday. for the close. Or no, 8. Shit, what am I saying? I'm still in what Pacific time? My God. 5 p.m. Pacific, 8 p.m. Eastern, Monday. Unless something crazy happens in the market, I'll come over and do a stream for sure. But I doubt it. I think the shit's gonna go sideways. Maybe bounce in like a $500 to $800 range all weekend. We'll see. Maybe 1,000. Yeah, guys, thanks for listening. We'll catch you on Monday.